We used investments in real estate and the stock market to pay off our $300,000 house, leave corporate America, and travel the world.
Check out our world travel playlist when you get a chance. We have bought and sold multiple rental properties since 2013. In this video, we're going to share our thoughts on multifamily versus single family.
What's up, Legacy Builders? I'm Rob.
I'm Reshawn, and this is Learn, Hustle, Grow. We help you build wealth and explore investing so that you can leave a legacy.
She's a stock trader.
He's a realtor.
And we are debt-free investors. The internet is an incredible resource. We all benefit so much from the sharing of free information.
We have stated multiple times just how much we have learned from listening to podcasts, reading blogs, and even listening to audiobooks.
Yes.
Now, in addition to the free content we provide on this channel, Rob and I actually participate in a few Facebook groups on the topic of personal finance and real estate. Now, we do this not only to continue our learning, but we also do this as a way to give back.
If you have a favorite educational blog or podcast that you're interested in, they might have a Facebook group that you can participate in.
Yeah, definitely check that out. In one of the groups we participate in, someone actually posted that there's absolutely nothing you can do with a single rental property. That the only way to profit in real estate is to have at least 10 units.
This is an example of misinformation. In 2013, our first home became our first rental property.
That 1,500 square foot, 3-bedroom, 2.5 bath home is one of the best decisions we've ever made to date. Even if we had never purchased another rental, we would actually still have an additional stream of income just based on that one real estate investment.
Speaking of great decisions, have you decided to join our community of legacy builders?
Now is the time to hit like and subscribe. Go ahead. We'll wait.
We're all about sharing our experiences in hopes that what we've learned might help you grow.
That one single family home was a game changer for us. Not only did it get us started on the path to real estate investing, the equity in that property helped us to pay off our primary residence. We'll include a link to how we paid off our $300,000 mortgage in 5 years in the description below.
The house is located in a Class A suburban neighborhood right near schools. It's perfect for families, and it never stays empty for 30 days or less.
Yeah. The second single family home we purchased in another suburban area with B+ schools also rents easy and doesn't stay vacant for long. Very profitable.
Real estate tip. Check out the economic development plan for the city you're planning to buy. A solid plan can lead to higher property values.
We experienced this firsthand by purchasing a single family home in an area called the Colony, Texas. We actually purchased that home before Nebraska Furniture Mart was built. That area has gone from a single major retailer to now a restaurant and entertainment district for hundreds or thousands of people to enjoy.
After purchasing a couple more single families, we were excited to grow our portfolio and increase our cash flow.
We were both listening to the Bigger Pockets podcast and had decided that small multifamily was the way to go.
Our single family investments were doing great. Unfortunately, in DFW, we don't have a lot of small multifamily units though.
We've shared before that this area is primarily single-family homes and large commercial apartment complexes. That's one of the reasons we ended up investing in a syndication deal. We told you guys about that in another video.
Anyway, unable to find what we were looking for here in the DFW area for multi-units, we started looking in our hometowns.
Rob is from the Norfolk, Virginia area. I am from Chicago, Illinois. We explored opportunities in both cities, but in the end decided to go with Norfolk.
We could get more for our money and be near a military base and not far from a university.
It seemed ideal. In 2018, we sold 2 of our single-family homes. We used a 1031 exchange to roll the profits from one sale into the purchase of a 6-unit building in a Class C Norfolk neighborhood.
Here is what we've learned after owning a small multi-unit for the last 3 years.
Okay, so you buy a multifamily with the idea and expectation that you are going to make more money. However, you also have to expect that there are going to be more costs involved.
The number one rule in real estate is location, location, location. The quality of the neighborhood matters.
There is a big difference between a Class C, B+, and A neighborhood. Remember, our small multifamily is in a Class C neighborhood.
Income is one of the criteria used to define the class of a neighborhood.
Class A neighborhoods generally have higher incomes, and Class C residents generally have lower incomes.
We grew up poor. This area is nicer than the places that we grew up in.
Our property was built in the 1980s. The previous owner had done little to nothing when it comes to the area of upgrades. So we made the decision that while we were buying a Class C property, we would provide quality housing to the residents in our community.
When we took over the property, we hired a new property manager, painted, and started making repairs immediately.
We also have a make-ready process before any new tenant moves in, where we freshen up each unit with a professional cleaning, paint, and new flooring if needed.
Applicants are screened with rental history, credit, and background checks. This still does not keep us from getting bad tenants.
Remember, the pro of multifamily is that you have more tenants and you collect more rent, which should mean more profitability. However, more tenants can also mean more people who cannot afford to pay their rent. Unfortunately, this was an issue even before COVID.
Sometimes people fall on hard times. Other times, they just spend their money elsewhere.
The tenants in our apartments pay less than half what the tenants in our houses pay, yet they still struggle to pay the rent.
COVID definitely made things worse. Companies were forced to lay off workers.
In 2019, 69% of Americans surveyed had less than $1,000 in savings. In 2020, we had a tenant who lived in our apartments for 6 months rent-free. When he left, he also trashed the place.
He wasn't supposed to have a dog in the place, but somehow managed to have dog poop all over the apartment.
Guys, he filled the toilet with so much poop that the entire toilet had to be replaced. In addition to painting and replacing the flooring, we had to have a special hazmat cleaning for that unit.
We have never had anyone trash one of our single family houses. The worst they've ever done is not report things that needed to be repaired.
Another commonly referenced pro for small multifamily housing is that you only have one roof to replace, and roofs can be costly. However, the con is that that one roof can cost up to 3 to 4 times as much as replacing the roof on a single family home.
It goes without saying that taxes and insurance on a multifamily is also significantly higher.
If you are a new investor with little to no reserves, owning a property where people fail to pay rent and you have high expenses can cause significant financial strain.
Of course, you take vacancies and repairs into consideration when you're doing your numbers before you buy the place, but you just can't prepare for everything.
While we got more units with our small multifamily, we also got more problems. When the time is right, we'll sell the property for a profit. We'll take that money and purchase another investment in a Class A or B neighborhood.
We're thinking a higher end duplex or Airbnb. We'll keep you guys posted.
See you in the next video.